I do is I'm never placing the trade without consulting. Okay. What is your favorite pair? Gold. Wow. So gold is a favorite pair, and I've had a lot of people who always say gold is their favorite pair. But honestly, me being 100% very honest with you, gold is one. I trade gold, right? But it has never been my favorite pair in any way. Even though I've made so much money with gold, I've lost some good money with gold. The reason why I always say that it has never been my favorite pair in any way is because during my trading upbringing, right, when I was coming up as a trader, during my first, second, third, fourth year in the market, I remember vividly that all the most painful moments I've ever had in the market has come, majority, not all, but majority of them has actually come from gold. Hello guys, welcome to another episode of Capital Conversations. We are bringing you another live and very lively and exciting conversation today as well. You know how we do it. We always bring across board the best traders that we have in the industry down here. Like we promised you that we're going to bring you face to face with these people for them to share what they have for you out there. They probably might be your mentors. They probably might be people who are actually in the process of teaching you how to trade. But our goal and our aim is to actually bring them on these platforms to send them the questions that you guys keep sending us to ask these people. So on today's episode, we have a very exciting guest. We have actually been planning this for quite some time now. And today, God being so good, we have been able to get hold of him. And before we go on to the conversation, I would like to issue a disclaimer that this is a strictly an educational platform. Whatever information that we spit out here is not a financial advice in any way. Whatever decisions that you make in the financial market with this information or with whatever information you are going to pick out here, you bear 100% risk for that. We are not financial advisors. We are not selling any product. We are not involved in anything that concerns advisory or whatever service. So we are here strictly and purposely for educational purposes and just enlightening you guys about the ways and means that you can pass to actually succeed in the financial market and actually become the consistently profitable trader that you want to become. So on today's episode, I'm going to go ahead straight forward to actually introduce my guest to you. It promises to be an exciting convo, and I can't wait for you to hear what we have for you. So grab your popcorns and just sit back and listen to the wisdom of the spirit that we are coming to give you on this episode today. So on today's episode, we have KEMMATRADES. I know majority of you out there know him on Instagram. You know, he's very popular. He's one of the top traders that we have in the country. Some of you, he is your mentor as well. So today we have your mentor right here on the big seat with all the questions lined up that he's coming to actually flow, for you to actually see the wisdom that you are tapping in, to learn the trading from. So welcome, bro.
Thank you.
Yeah, we have actually been planning this for a while, and today I thank God that we actually have you here. So yeah, thank you so much. So let's go straight to the conversation. Like I said, like we introduced in the first place, we intend to actually make this platform as big enough for us to be able to elevate the trading space that we have in our country, to actually lift up this industry, for people to know that this is what we have dedicated ourselves for, and for the people out there, for the newbies out there, to be inspired by what we have to share with them and the lives that we have been able to achieve through this market, so that they can actually also take action and follow our lead. So walk me through your journey to the market. How did it start, and how long have you been in the market?
So do you want to know about my
Yeah,
journey?
just introduce yourself in the first place,
Okay.
and how you got into the forex market. What inspired your journey into the forex market?
All right. So, to your wonderful viewers out there, my name is Emmanuel Addo, and then popularly known as KEMMATRADES. So, Kemma is actually a name that is merged.
Okay.
So, Kofi Emmanuel.
Oh,
So
I see.
Yes.
So Kofi Emmanuel, and you just merged it to Kemma.
Kemma.
Ah, that's
so
nice.
Just short. So
Yeah.
everybody calls me Kemma. My
Yeah,
mom,
yeah.
dad,
That's
everybody.
I actually don't know your real name. I know you as KEMMATRADES. So yeah.
So
that's
the
nice.
name is Emmanuel.
Okay.
God is with me everywhere.
Sure. Okay, then let's go ahead.
All right. So Emmanuel, and then I'm married.
Okay.
To Mrs. Addo.
I see.
Yes, and now I have a son.
Oh, wow.
He's about 3 months old.
Wow.
So that is just a
That's just by the way, yeah.
And that is just the recent thing that people see, you know,
Yeah.
like in this particular space. But this whole thing actually started somewhere in 2017, 2018.
Okay.
I happen to be in like a team of brothers.
Okay.
That if you look at the trading industry currently in Ghana, these are the individuals who are topping the chart when it comes to trading forex.
Okay.
The likes of Common Forex.
You can mention the
Okay,
names.
so the likes of Common Forex, Joe Trader, Swinger, Kudu Forex. These are not like friends. These are brothers.
Okay. I know all of them anyway, but I haven't met any of them. Maybe
Okay.
probably I will look to bring all these people on the show as well.
Also, you should.
Yeah.
You know, that's a well of knowledge to tap from.
Yeah.
So I was a teacher back then. After several jobs, you know, like in this particular economy, a man needs to try as much as possible to find a lot of things to do with your hands in order to make ends meet. So after all the small jobs that I had done, teaching was what I landed at, and surprisingly, it was paying 300 cedis at the end of every month.
Wow, 300 cedis.
And today,
your salary was 300
I'm
cedis
not
a
gonna lie
month.
to you.
Wow.
Today, if I take a look at other people who say their salary is 450, 500, I'm like, hey, how are you able to survive? But
Really?
trust me, like then we were surviving on that 300 cedis.
Yeah.
Maybe the economy is different from those
yeah.
days. This time it will be quite difficult, but that was what we were receiving as like monthly income for what we were doing. But for the love of the job, I've always, my calling is a teacher.
Teacher, yeah.
Yes, that's my calling. So I've always loved to understand certain things and then interpret it to other people, explain it to other people whenever they needed the help to. So this teaching space, being the educator in the forex industry, sort of aligns with my calling, right? So that's why I'm able to do it really, really well. I was teaching, and then my friends called me. So when I say my friends, I'm talking about my brothers who I was talking about.
Yeah.
So the Forex, Swinger, he said, hey Charlie, we have chanced on something interesting. Apparently, Kojo had chanced on Forex. Okay. I was, I think, watching Sunday shares.
Okay.
Yes, and then that was about 4 years prior to the time that I was Forex.
Yeah.
So I really love that because like when you chance on something, you need to at least understand how it works. You don't chance on it and then just call everybody to come in. So throughout his university days, I heard that he was trading, scalping, but he had not necessarily sat down to understand the dynamics of the market. So when he called us to actually come together, to come and then follow this as a business, right, together, that was when we actually sat down and said, hey, you know what, let us understand how this works. So I used to live with him in the same room. Okay. So most of the things that I learned was from from the same desk.
Yeah.
How do you get it? He gets all the theories and stuff. Those days it was really very expensive to get forex education. It's not like
very very. It was very expensive. I know that.
I've been a mentor for about I think 2 years, and it is one of the most difficult jobs in this world. Someone pays you literally about $299 or $150, and you have to teach this person consistently for about six months before they come to understand what they are doing. And
I understand.
Let me leave them to do it.
For real.
But I could sit on the market and make that $300
easy
in a couple of minutes.
Easy.
You get it. So anyone who is out there who is mentoring people, is actually helping people. It's not like they want to collect.
And that's what I tell them every day.
Exactly. So at the end of the day, like studying through those periods, I used to remember how he would get some of these courses, like learn some of these theories and then all. And I'll come to the desk and then, like take a look at what exactly he has found, and then I used to also take a look at his diary and then all. Then I bring down all these concepts. Then I say, okay, these are the concepts that we have. Candlestick, what is candlestick? Chart pattern, what is chart pattern? Let me understand the dynamics of these things, right? Thorough understanding of how they actually work, so that I have that in-depth understanding of the market in order to approach it. So fast forward, I think we were together for about 3 years consistently, and that helped for me to be able to at least kick off my trading journey. I made some few, like amount of money on the market, which spiked my interest. If you find something and then like you realize that hey, it's like bet, sports betting. You go in there, you win the first time, second time, third time. When someone tells you stop betting, you will get the first time.
For real.
So at the end of the day, I had people on my neck saying, hey, like this thing is not the way to go. We have heard people do this, we have heard people do that. These are the stories that we have heard of some of the people who are traders out there. But getting deeper into trading, I began to understand why some of these people have some of these problems that they constantly get into. Because I actually went into some of them, and then I was like able to come out of those problems. So this is how the journey started for me. First, we met at the mall.
Which of the malls?
Accra Mall. Those days. And we were 8 people. So these traders that I mentioned, Nanaya FX and all, right? And we all came together. This is the goal. So Forex was the first forex trading those days that we brought about, and then we started, helping people with their forex journey. And gradually, as we were helping people, or as they being the spearheads were helping people, I was also helping myself, along the way, trying to understand how exactly everything works. I remember I used to, stay in the room for as long as 3 days, 4 days, just because I wanted to understand a particular concept. And if I don't, I give myself a little break, then I come back to the same concept again, over and over. 3.5 years down the line, right? That was when I got my niche. I actually stayed in the market for 3.5 years before I got my first trading strategy.
Wow.
That I could call my own.
Your own.
Something that I understood for myself. Something that my persona could resonate with. There are different kinds of traders out there, so you have to find who you are, and then you know how exactly you can approach the market. I don't know how to place those 20 lot sizes, 50 lot sizes. I'm good with that 1 lot size, 0.5 lot size. But it means if I have to make money like you, who places the 20 lot size on the market, then I need to understand how, like the long-term macro, perspective of the pairs that I'm actually trading. So I have to stay in the market longer than usual. Maybe the 300 pips, the 500 pips. So with that just 1 lot, I could be looking at 5K. With that 0.5 lot, I could be looking at 2,000. How do you understand? Yes. So that's how I have been in this market. I'm looking at the longevity of things, so I'm not bowing out anytime soon.
Well, that's an interesting story, and my favorite part of this whole story that you were saying is the fact that you had some sort of brotherhood. That I wish I had that anyway, because my trading journey was very, very lonely. I was all alone in everything. So you were telling me about this experience of you having a brotherhood, but a group of guys, who got introduced to a craft, and you all took up the chance to actually learn, from somewhere. And now look at all of you, because all 4 or 5 of you are all successful traders now. These are the sort of things that should actually motivate people out there, that you don't always have to be alone doing something for everybody to say that you are the champion. Sometimes brotherhood is the best thing. Like Andrew Tate keeps saying, that you can never achieve greatness without brotherhood, without a brother, right? Because no army conquered any empire in ancient times by a single man. It was actually a group of men who always came together to conquer. So that is actually my favorite part of this whole story that you were saying about this brotherhood thing. So let's get along. So when you started, do you remember your first ever successful trade, and how was the feeling?
Yeah,
when you actually made your first money in the market.
So the first amount that I made on the market was 500 Ghana cedis.
500 Ghana cedis.
And I made that money under 10 minutes.
Okay.
So you see the kind of orientation that I have, I had, with money,
okay,
allows me to be able to respect it.
Yeah.
Respect money.
Respect money, yeah.
So I'm working on a job that pays me 300 Ghana cedis at the end of the month. I wake up at as early as 5 a.m., get ready, make sure I get to the school by 7 a.m. And then I will leave the school by 5 p.m. And it goes all over again the next day, all the way to Friday. Yeah. Saturday, I still go to extra classes just so I can make extra
money.
Exactly. Yeah. Then Sundays are the only free days that I'll have. If that, and in a couple of minutes on the market, I made 500, you will know how much I appreciated that 500.
Absolutely.
When I made it.
Absolutely.
So that is what actually made it, stick in mind. Those days, I didn't create a dollar account.
Okay.
We had the privilege of having one very good broker that actually offered us cedis to be able to create a
CD account. Yeah, okay.
So then I deposited in cedis, and so making that 500 Ghana cedis, in that short period of time was insane.
Very, very.
The feeling,
And I know that I
I
can
don't
imagine that.
I don't think I'll ever have
I can imagine I do that. Yeah.
experience that will give me that kind of feeling.
I see. That's a really interesting story. So you said it when you started trading, right? It took you 3.5 years for you to actually build your first strategy in the market.
Yeah.
So just walk us through the kind of strategy that you are talking about and how you maneuver your way around it.
Okay. So in anything at all, when you are endeavoring into any venture, one of the things that is undermined is a strategy in order to go through that particular process. For instance, if you are, in marriage, right? There are certain things that you need to put in place about your finances, about how you handle your children, and everything. That's a strategy that you are planning. It's a strategy that you are going to use in order to run the family affairs from time to time. In coming into this particular space as well, everybody needs a strategy to approach the market because market moves. But how does market move? Where is market going to? How do I enter the market? These are questions that you need to ask yourself. And when you ask yourself those questions, now you begin to find answers to those questions. Those answers that you find for yourself is how you want to approach the market. That becomes a strategy for you. So I did not understand this from the onset. I was like every other beginner who comes into the market and then, the adrenaline, it's money making, grounds. We want to make money, we want to flip. You hear that a lot in the
flip accounts.
I hardly have students that I advise to do that. Yes. I have students that usually flip and then they tag me on Instagram and then I will not repost because that's not what I want to teach other people. Longevity is what I want to teach other people. How to stay in the
game for a very long time.
Exactly. And flipping is not the way. So in that 3.5 years, having been able to understand this, I then asked myself, okay, how do I want to approach the market? First of all, I need to find out a few things. What are these things that I need to find out? One, what is the direction of the market? Okay. Every time I approach the market, I ask myself this question: what is the direction for today, or what is the direction for this week? Okay. Then the next thing is, if I have found the direction, which is the trend of the market, how is the market traveling? Okay. Then it brings me to a structure. Okay. You get me? I see. So now, how is the market traveling? Whilst it is going towards this direction, structure. Okay, that's when you hear higher highs and higher lows. When you go on YouTube, you hear most of these things, like YouTube University, right? Then there's more to it anyway. Then after that, we look at significant swing points. Okay, market is traveling this way, market structure, we understand higher highs and higher lows, but do you know where your significant swing points are? When market moves from one area to the next, can you pinpoint those swing points, in that structure? Once you're able to find those swing points within the current period where you're about to trade, the extremes of those points, significant swing low, significant swing high, those are your extreme points for you to actually tackle the market now that you are coming in there. So that people will call it the major resistance areas, major support areas. People will call it demand and then supply. I like demand and supply. So then that is the next thing. Finding the demand and supply analysis based on the significant swing high and the swing low that I have.
Those are the pivot points that sometimes we call
straightforward. So if market is coming towards the downside or there's a pullback, I ask myself, where do I think this market is coming to?
Okay.
Then I lay ambush like a soldier and wait for market to come in there, and I snap at the market.
Okay.
You understand? In talking about snipering the market, when it comes into my point of interest, there is also something to look out for. If market gets into that point of interest, what are your criteria for your entry? Or people will say, what is your entry criteria?
Yeah.
There are different kinds of entry. Risk entry, confirmed entry. If it's a risk entry, how am I going to enter the market? If it's a confirmed entry, what am I going to look out for my confirmation to jump in on this trade? All of these things, you know.
I see. That's quite an interesting strategy, and I think with respect to everything that you are explaining here right now, I quite resonate with all of majority of these things that you are actually saying. So we live in a space where this is a huge financial market, right? That we have a broader financial market that we all know, the stock market, the forex market, the bonds market, and all of that. And people down here, people actually limit it to just the forex market. Because when you hear traders out there, the only thing that people actually think you trade is forex, right? So I want to ask you, is there a specific market that you trade apart from the forex market, or it's only the forex market that you trade? I just want to understand.
Currently, I'm only inclined to trade in the forex market.
The forex market.
Okay. I'm learning the dynamics of investing in the crypto market.
Crypto market.
But as I said earlier on, you need to understand the inside out of everything before you actually jump in there. So I'm still on that.
Okay. So let's take the forex market, because that's what you trade. So what is your favorite pair in the forex market? Gold. Wow. So gold is your favorite pair, and I've had a lot of people who always say gold is their favorite pair. But honestly, me being 100% very honest with you, gold is one. I trade gold, right? But it has never been my favorite pair in any way. Even though I've made so much money with gold, I've lost some good money with gold. The reason why I always say that it has never been my favorite pair in any way is because during my trading upbringing, right, when I was coming up as a trader, during my first, second, third, fourth year in the market, I remember vividly that all the most painful moments I've ever had in the market has come, majority, not all, but majority of them has actually come from gold, right? Yes. So I think, when I recalibrate my mind, to that past, it actually prevents me from actually liking gold. Right? But I still trade gold. I make money with gold. But I hear a lot of people saying gold is my favorite, gold is my favorite. And when I hear it, I'm happy about it. But I can never say gold is my favorite because of what it has done to me in the past. Yes, even though right now the kind of money that gold has made me probably far supersedes money I've lost to gold. But the experiences that's given me, some of the most painful experiences that I've had in the market. You understand? And I think that is what really casts my mind back to that anytime that I think about it. So tell me a little bit about your approach to trading the gold market.
Okay. So first of all, I would just like to put this across. Gold is my favorite pair because I've actually studied the pair for a very long period. When I was after I had gotten my strategy and I was implementing it on the market, the pair that I was testing it on was gold. So over a long period of time, probably about 6 months of back testing on just gold. When I actually started making good money on the market, it is gold that actually made me that money on the market. So people based on experiences of individuals, they make certain decisions. So I don't like this car. Okay, let me not mention the brand name, but there's a particular kind of, I wanted to mention the name, but there's a particular kind of car brand that I do not like at all.
Okay.
Why? Because one of my friends had an accident with that car.
Okay.
So to me, that makes me not want to ever purchase that car.
Okay.
As much as beautiful as it is, I will never purchase it.
Okay.
So based on that experience, you see the decision that I've taken.
Yeah.
So just like you were saying, you know, like the decision that you have made on gold not being, you know, one of the favorite pairs comes from or stems from the fact that many of your losses that you have made comes from gold.
Yeah.
Many of my profits that I've made comes from gold. That makes it, you know,
Yeah.
like, I know the gold market.
Okay.
With the way I trade, gold actually gives way to that kind of trading. If I'm looking at market moving from a particular region, right? Let's say 2380, where price was today before the CPI came,
yeah.
price pushed all the way towards the upside. You realize that price had pushed about over 300 pips
300 pips, yeah.
just on CPI.
Yeah.
How we get it?
Yeah.
Being in that particular ballgame with the way I trade, 0.5, one lot, sometimes even 0.25 on the market, I need a pair that moves fast, a pair that is volatile, a pair that has liquid.
Okay.
Gold is one of, you know, such pairs. And going through the stress of, you know, like trading US 30, Nasdaq, I would have rather loved to trade gold.
I see.
That I understand. It's affiliated with the USD, which makes it easier to trade anyways, because I have other confluences that I bring along when trading.
Okay.
For instance, DXY is a very good determinant of the value increase and decrease of the dollar.
Yeah.
Based on that, GBP USD is another pair that I trade. So I just trade GBP USD and then gold, just these two pairs. I think 6 months along the way there was Euro USD, but because of the low liquidity on that, I had to drop. So you get where I'm coming from.
Yeah.
Yeah. So at the end of the day, if I place that 0.5 on the market, what pair can give me that kind of magnitude of movement that will make me that amount of money that you would place 20 lots, 10 lots on the market, that you're making 50 pips on whatever pair that you are trading.
Yeah. So I think I perfectly understand from that point of view that, you know, you like more volatile pairs because of the volume that you trade personally.
Exactly.
Yeah.
Exactly.
Yeah. And
the way that I trade,
yeah,
you know, like,
that's totally understandable.
Yes.
That's totally very understandable because me, for instance, as well, even though I mostly maybe trade big lots, right? But I hate pairs that has low movement, low volume movement, right? Yeah. So if you ask me my favorite pair is actually GBP JPY.
Okay.
Right?
Nice.
Yes, that is my favorite pair. Why is it my favorite pair? Apart from the fact that I know the ins and outs of the Japanese yen as a currency, right? I also believe that all the pairs that are affiliated to the Japanese yen have that, you know, big volume movement. Because if we are taking maybe from one swing point to another swing point on the GBP JPY, if that one swing point from here to here is going to give you, let's say, 60 pips on GBP JPY, that same swing point or maybe Euro USD is just like 20 or 15 pips.
Great. Yes.
You understand?
Yes.
So that is why I stick to that, because I believe that, okay, if these two pairs all move into the same area, all move the same length, let's use length for example, all move the same length, this is giving me 65 pips, this is giving me 15 or 20 pips. You understand? For the same length of movement or the same time frame that I'm going to wait for the move to materialize. So why don't I stick to this? So that is my rationale behind the reason why.
Then why don't
yen
you
pairs?
go?
Yes. So the reason why I like these things more than gold is because, like you said, I like to have in-depth information about what I trade and what I like. You understand? The same way you have maximum information about how gold behaves and how it works. Previously, it used to be one of my favorite pairs. Previously, used to be USD ZAR.
Okay, yeah.
You understand? That is South African rand. Yes, right. It's recently that I've slowed down on it a little bit because of the spread. Because the spread became too wide for me, and you know, as a business guy, you just feel like, yo, if you're going to be placing trades on this pair, that is, you're going to play this spread, why don't you just ditch it? Because there are equally good volume pairs out there
that
that you can actually pay smaller swap fees on that.
Yeah.
So I think so let's come back to the market, right, on the chart. Do you believe in indicators?
Yes.
Why?
I do. I use them.
Why?
So let me just put this across for a lot of people to understand. Today people will learn knowledge. So when we say the name indicator, right, what comes to your mind? Something that indicates any other thing.
Yeah.
So people are using indicators out there and they keep saying that, okay, so indicators are working, indicators are working, but you are using a kind of indicator on the market. If not for moving averages, not all moving average is not the only indicator that we have out there.
Yeah.
On my chart, when you go onto my chart, one of the things that you would realize is I have something that, you know, a vertical line that runs across that chart because I'm constantly on the 4-hour time frame.
Okay.
Vertical lines that run across the chart. These vertical lines represent the open and close of each week.
Okay.
That is an indicator.
Yeah.
It is indicating when a week opens and when the week ends.
I see.
So I'm using it.
Yeah.
There are other vertical lines that shows when I go on the lower time frame, 15 minutes, it shows me Tokyo session, London session, and New York session. It's an indicator. I'm using it. So if it is about indicators, definitely I trust in a few and I use them on the market. But if it is about moving averages, I've used them before, you know, like when we started our journey. I remember one strategy that Koyo and I used to, you know, like use. It was called the Williams chaos theory, right? I know you know the Williams. So you go to the MT4 to check the Williams, you find all the things that necessary indicators that comes under the Williams chaos theory. So we have the alligator. Now the theory about the alligator is really fun, but we have I think 15, 5 and then 3 moving averages. Three different moving averages. I think I'm right, yes. Yeah, I think so. Then one is red, one is blue, and one is green. Okay. Now when the moving averages are intertwined, we say that the alligator is sleeping. Okay. When market is about to trend, it begins to open up. One goes a different direction, one comes a different, but they will all be pointing towards a particular direction. Where if it is downside, but one is going in a different location, and if it is upside, and now we can tell that so market is about to trend. So now we can jump in on a sell or we can jump in on a buy. That was the strategy that we used to trade. And trust me, it worked brilliantly on GBP USD pairs. Okay. And because it was pre-Brexit era, the pound pairs were moving, you know, in the same direction. Whenever, or like majorly, the pound was in control. Yeah. So if you are having GBP USD go on a buy side, we can literally not even going on GBP JPY, not going on GBP AUD, GBP NZD, or just say buy all GBP base currency pairs now. So all the pairs that have GBP as their base currencies, like buy them, except for Euro GBP, because the GBP in here is the quote currency, which means, you know, we are expecting it to come down when the others are going. You realize that it worked brilliantly. So at the end of the day, my belief is in how I approach the market now, and how I think that most of the indicators are not so relevant to me. You know, like in how I trade pure price action. My strategy is pure price action. I don't need any indicator to tell me anything, except for at least those ones that will show me the beginning of the week, the end of the week, and then the different sessions within each day.
Okay, so that's quite interesting. Like you said, when you said you believe in indicator, like people might definitely be saying that he's coming to talk about stochastic and you know RSI and all these things. No, that's not what he's talking about. Like I said, he's a pure price action trader, and that's exactly who I am as well. You know, and like you said, I've learned one new thing right now from what you said. That you drawing those lines, those vertical lines to show you the highs and lows of
actually I'm not even the one who draws
specific.
It's an indicator
that shows you something, right? Yes, okay. I haven't actually discovered that on the chart anyway.
Yeah, I'll give it to you.
Yeah. So you see, I believe that all these indicators that we have, because when you can see new traders out there, and you can read your book, and the book will tell you that plot this EMAs, plot this. When this EMA crosses this, it means this. I learned a bunch of all these strategies when I was coming up back in the days. I have a book here that I have all these things in there. A book that stands for like 7, 8, 9 years. I still have the book. Right. But I open it to you, like you understand these things. So it took me until later before I came to realize that no, I'm doing all these things wrong, because all these indicators are telling me that do this, do this, do this, do that. But you do the exact same thing and you still wouldn't end up nothing, right? So until I later grew in the game to come to find out that, these indicators that we have in the market, they are all embedded in price already. And it's price that gives this indicator signal. So why don't I learn directly from price? Instead of coming to learn from the indicator that is some sort of a middleman, right? So that is what made me actually turn into a full-time price action trader, because I came to realize, or I came to understand that so all these indicators out there, before they move, they need a command from price. So if they need a command from price, why don't I go to price directly to go and take that command myself, instead of me waiting for price to give that command to an indicator for me to enter into the market? And that is just by the way when it comes to indicators. Yeah. So let's move ahead. So, like, you've spent years in the market, right? As we all know. I know you've seen all the ups and downs, you've seen, all the glory, you've seen all the money you can see and all of that. Tell me about, the most difficult period that you've had in the market and how you were able to come out from it.
So, I think there's a lot of traders out there would resonate with this, right? Coming up as a trader is very difficult to, make anything out of $100, $150.
That's for real.
That's why a lot of people are inclined to flipping these days.
Yeah.
One of the things that you realize that those days, we didn't even, prop firms were now coming up. It was very expensive to get a prop firm account. So we resorted to trading our own small capital. But whenever there was the opportunity for individuals to say, I have $1,000, can you trade it for me? Like one of the mistakes of many traders, you are so enthused about it. Like, yeah, I can trade it. Then you will stick your neck out for a problem that you are not prepared for. Now, this is the thing. Most of the individuals down here in Ghana do not understand the concept of investment. They do not understand the concept of
heavily.
People do not even understand that speculation is different from speculative venture is different from investment. We are all looking for profits anyway, but investment is long term.
It's a long term game. Yeah.
Good. Speculative has the question, how fast can I get this money?
Yeah.
So that's the difference between the two, even though they are all looking for money. So at the end of the day, you may come across people that will say, I'm ready to part ways with this $1,000, with this $2,000. Let's get in on the market and let's see how exactly we do. Because you are enthused as a trader and you believe strongly, as for that one, if you don't even believe me, I'll come and match you. You believe strongly that you are there. You are flipping your $100 to $200. You end up going to take someone's money of $2,000, $1,000, put it on the market, and by the time you realize 400 is gone, 600 is gone, 200 is gone, then now you are sitting at $100 more. Now the only thing that comes into your head is, how do I turn this $100 back to that $2,000 and give it back to the person?
Yes.
And because that is the mindset that you have, that $100, you will lose it as well.
Yeah.
At the end of the day, these people will come back and they say, hey, give me back my money. Because they don't understand the concept of the fact that on the market, losses are part of it. Or most of the traders who are down here, mentors who are down here or everywhere, do not maximize or make a big issue the fact that you can also lose on the market.
Yeah.
They only showcase the profits.
Mm-hmm.
Right? They only show you how I made $2,000, how I made $5,000 in the market. Nobody shows how I made that $50,000 loss.
Yes.
How I lost all my capital.
That's the problem we have in the industry.
Exactly. So people come in there with a kind of confidence that they also come to do the same thing, blindsided by the fact that there are also losses. I found myself in that situation anyways, and then I had to pay back these friends of mine. Lucky enough, these were my friends, and so I had to have a discussion with them. Guys, this is markets, they're chopping. Let's all understand it. If we make profits, we would enjoy it.
Yeah.
We didn't make profit on this one. And there were people that I had actually traded for that I had made profits for.
Mm-hmm.
So the second time when it happened was like, Charlie, we know what you have done before. So there was that kind of understanding. Okay, but not everybody can be that understanding.
Oh yeah.
There are people who I know have gotten into big trouble. So after getting out of that particular area, now this is how I got out of it. I was trading for myself now because I understood how the game is now. I found a little bit of capital for myself, put it on the market, and then started, trading it gradually. I had friends who were willing to say, I'm gonna help you do this. So a friend would say, okay, so take this and then sort that thing that is hanging around your neck. You get it? Because if you get into a drawdown phase, one of the things that happens is that you will get deeper into if you don't take it.
Yeah.
So you make a huge loss. You want to recover the loss. Because of the mindset, you can have yourself going deeper and deeper into such levels.
Yeah.
And trust me, about 80% of traders, go through things like this. Some are, lucky enough to come out of it, easily. Some are not so lucky to come out of it, without a fight.
Yeah.
So I had my fair share of fights.
Oh.
And then gradually I traded my way out, and then with the help of good friends and good brothers as well, I was able to come out of that. Brothers who actually understood.
Yeah.
Because they are also being in the same, position.
So that sounds like an interesting story. Like you said, I have one guy who always tell me that money is a delicate commodity, right? You can have the best of relationship with a friend, but it might shock you that it will be because of a small amount of money and this person will fall out with you. So when I'm dealing with people concerning money, I'm always very careful. I'm always very careful that and like you said, in this area or in this region that we live, majority of people don't understand the concept of investing, right? Because when people hear about investing, because of the experiences that they've had with Men's Gold, DKM, and all these Ponzi schemes, all they know is, okay, I'm bringing my money, how much are you going to give me every month? I'm bringing my money, how much are you going to give me every 3 months? They don't understand the fact that we live in a financial market that carries some sort of risk, that there is no certainty over here that, okay, if they bring their money, they should understand that, okay, this is a risky venture, so now we're going to run this account. Whatever happens to this money within the next 3 months or whatever, that is what we are going to check. Because I personally has been managing an account for a big friend of mine, and I've been managing the account for close to 2 years now, $100,000 account for close to 2 years now. For the past 2 years, we've gone from stride to stride. We share profit every 3 months, right? Every 3 months we share profit, and I can tell you that the lowest 3 months we've had ever since I started trading the account for the past 2 years was, I think, a month that a time that we had, I think, like 3%, 3%, yeah, I think 3%. You understand? But we've never gone on a whole 3 months that the accounts have turned negative before. Even though within those 3 months, a lot of ups and downs will happen, but I still always come up like that. And I think there was a time that I think during the Russian-Ukraine war, yes, at that night, I was straight before the Russian president made an announcement for the special military operation. I was actually trading, and funny enough, I fell asleep when I was trading, and I had a whole lot of positions on that there was zero stop losses, because that time I was trading the Asian session, and when I'm day trading or when I'm doing any sort of short-term trading, I don't use stop losses because I monitor the trades every now and then. Wow. So yes, and unfortunately I fell asleep. By the time I woke up, my personal account that I was trading was down about $120,000, right? And this my man's account that I was trading was down. It was down about 40,000 as well. So my personal account was down 120,000. His 100,000 was down at 40. The first message I received in the morning was around 9 a.m. in the morning, and he texted me that, yo, I just got to the office and I viewed the account and I saw this what had happened. I was just watching CNBC and I saw what was happening. I believe in you. I know you can do this. So take your time and trade. Like, how many people can you have like this? You understand? Yeah. So when you are trading when you are managing funds for people like that, you have that sort of calmness to actually work, because these are people who understand the business, who understand the game, who understand what you are doing with their money. There are these people, when you go on 1% or 2% drawdown, they'll be calling you to act, like, you understand?
Yeah.
So I understand perfectly your experience, even though I haven't experienced that before, because I'm that person that since I became a consistently profitable trader, before you really get access to me personally with any fund, you need to be, someone that I know, you from in and out. So I have not really had that experience where, I've taken, that sort of, but it's quite an experience that I think people out there will need to learn from, yes, people out there will need to, and you're not the first person. I know a lot of people who have actually gone into this same experience that, they took people's money to trade for them, it went south, and there was, a tussle up and down and all of that. But that was just by the way, we all learn our lessons and we just move on with this. So coming from the worst experience you've had in the market, that was a bad time. Tell me about the good times too, like the best money or the biggest money you've made in the market, how ecstatic that was. So, share the experience.
Talk of the losses there are so many. So many.
Yeah, so that's the bad part. Let's talk about the good times too.
Well, the good times, like I've had times when I was actually anticipating. One of the things that I do is I never place any trade without a stop loss.
Okay.
I never do that because there was a time then we lost $50,000 in 4 days.
Okay. My
brother and myself trading gold, right? Stashing onto positions, just averaging the losses.
Averaging down.
Exactly. And so that was way back, and it made me learn not to do certain things in the market. So I'm content with the trade. Before I enter any trade now, for the past 3.5 years, I make sure I analyze the trade. I want to know how much I'm losing on such a trade before I go in there. Any amount that I'm losing, I make sure I am okay with losing that amount as part of the capital that I'm giving away on the risk for that trade before I actually go in there. Now, one of the best experiences that I had, I actually went to sleep without a take profit point. So stop loss in place. Perfect. I know how much I'm risking.
I don't actually said take profit as well.
Oh wow.
Yeah.
So how are you are constantly watching the market?
I'm constantly watching my pivot point.
Okay, so I have actually trained myself and then brought about that strategy that gives me that free and fair mindset. So I could place a trade on the market and leave that trade and be doing anything around the house.
Okay.
Walking, doing without necessarily having my mind on the trade, because if it hits stop loss, I know how much I've lost.
Yeah.
I'm okay losing that amount. That's why I placed that trade in the first place. Doing that would actually give you a very good edge on the market from time to time. I'm not really a fan of sitting behind the PC, except when I'm doing editing and stuff like that. So I put SL in place without take profit, because I was anticipating that this particular trade could hit a particular target, but also there's the tendency of it going beyond that particular target. I woke up and that day gold had done 800 pips on the market, dropped towards the downside. And I remember we were having this trading floor at the morning. So I was, I woke up and I was now preparing to come teach at the academy. And I opened the chart and I was like, whoa!
So how much loss that you have on? Did you have on for the 800 pips?
For that 800 pips?
Yes.
Oh, I had about $180 loss. like that is the margin that I give myself. $180.
Okay.
It means if that trade hits stop loss, I'm losing $180 on the market.
Okay.
And having that 800 pips on the market, I was looking at somewhere about, it wasn't too much money. I think it was about $4,000 something.
Okay, that was back then.
That was back then.
Okay.
To me, it was big money.
It was a lot of money.
Exactly.
Yeah.
You get it. And the interesting thing is, I kept it to myself. Like, hey. So when I came, I showed it to the students. I said, Charlie, you see, the trader I was talking to you about, that there was going to be a drop and all.
Mm-hmm.
And then that was basically it. Goes into my pocket. Charlie closed all the trade after showing it to the students, and then I cashed out on that. That was one big experience. These are experiences that they are things that you don't expect, and then they come. They bring you a different kind of feeling than when you are expecting 5K. Okay, the profit is here, 5K. Okay, the profit is here. If I make this, I've made 8K on the market. You get what I mean? Okay, CPI, they come see, so and so. This is the amount that I'm looking to make. When you make that money, because you are expectant of it, it doesn't give you any kind of feeling. But you wake up to a particular trade that you thought maybe will give you 100 pips or 200 pips. Then all of a sudden you find out that the market has dropped excessively. You know, like that is a whole. You want to show the whole world that this is what has happened.
Yeah. I think I understand. I understand perfectly. You know, you waking up and seeing everywhere catching fire for you. I don't like I said. I don't set take profit because I only set stop losses sometimes. That is when I'm moving away from my PC or anything. That's when I put my stop loss in place. But I never set take profit because I believe that if I'm protecting my account, I don't need to protect profit as well. You understand? Even though yes, there might be times where market can hit your target and you might not be available, the market will reverse. But it happens rarely because I've had countless circumstances that that market has blown through my expected target. You understand? Because there was a time, I think somewhere last year, I think I had an interview with a funded trader. I was trading a prop account. That when you go to YouTube, you will see that I made I think a 19,200 payout from the funded trader, and I had an interview. And majority of that trades come from, I think, one night I had two JPY pairs on. That was GBP JPY and Euro GBP JPY, Euro JPY, and CHF JPY. So it was all JPY pairs, right? And it was at night, and I was going to sleep. So when I was going to sleep, I actually set all my stop losses. I mean, my average stop loss is normally 20 to 25 pips maximum. That's my average. So I set all my stop losses on all these three positions, and I had quite, some nice positions on. And by the time I woke up in the morning, there was a news that happened, Bank of Japan news that happened that night. And by the time I woke up, I was in about 500 pips each on all the positions, right? And that was big money. And that I was everything about me was through the roof. Right, so imagine, and my initial target for all these positions, I think the maximum was about 110 pips, right? One was like 80 pips, one was like 70 something pips for all these three pairs. But since I didn't put in all these take profit target, by the time I woke up, I was in 500 from all of them because the spike was so huge. And you know about JPY, when JPY is dropping or going up, the spikes are so huge. Look at what happened today. It was about 400 pips swing, for just one candle, 1 4-hour candle. So that is the reason why I don't believe in setting take profit, because I believe that when I set take profit, I'm actually limiting myself from the potential that the market can give me, right? So that is actually just by the way.
Well, have you ever thought about setting or looking at a bigger picture to see the potential profit that you can make? For instance, instead of looking at GPG on the 15-minute time frame, when you go onto the 4-hour time frame, you could be able to find the major zones in there that market has the potential of spiking into whenever it's going to. So instead of leaving it blank, you rather set these profits to those high levels so that you allow markets.
Well, I'm that person that I don't trade any time frame that is below the 1 hour time frame. Right? Yeah, because when I'm even doing top-down analysis, I start from the weekly, daily, 4 hour, and at least 1 hour for entries.
Okay.
Right? 1 hour time frame for entries. So when I set or when I see a target that maybe there's no liquidity in the market, the movement in the market is slow, and normally when the movement in the market is slow and when the volume is contracted, that is when I stay on the 1 hour time frame, right? Because with that one, it's like the market is in a range bound mood, so you are able to catch some 25-30 pips, take profit, 25-30 pips top close. Because when the market is not trending, you can't force it to trend. You understand? So you need to take advantage of the situation or the mood that the market is in now. That is when I sometimes rest on the 1 hour chart. But when the market is in a good strength or a good momentum, uptrend or downtrend, but when I stay normally on the 4 hour in the daily time frame. You understand? So with that one, I just feel like, okay, if I'm setting a point, or if I'm not close to my machine and I'm setting a particular point, that this point, the market should maybe spike into this point for me to take profit. Yeah, probably if I see the point and maybe I'm going far away from my computer, I will do that. Yeah. So that's basically just by the way. So let's move on. So let's come to the concept of risk management, right? I know it's a very important concept that people talk about in the market because the genesis of all blown accounts comes from lack of good risk management. So walk me through your risk management strategy and how you are able to approach drawdowns in the market.
Okay, so even before I delve into the risk management area, how to approach drawdowns in the market is following my strategy. Because I'm trading market structure, there are clear areas that I want my stop loss to be. There's something that I tell my students always. You have to put the stop loss where it needs to be, not where you want it to be. If you put the stop loss where it needs to be, you are safe. If you put it where you want it to be, market can come, pick you out, and still go your direction. There's one key thing that I learned from one of my mentors out there. So in saying that, one of the things that I do is I'm always looking to lose what I am comfortable losing on every trade. When I started doing that, there was not much for me to place. There was not much emphasis for me to place on psychology. Now, it's all a part of the risk management rules. This is the thing. Let me explain something to you in a very simple way. I want to explain as simple as possible so that your viewers will be able to understand. Everything that we do involves risk. If you are driving, it involves the risk of you having an accident, knocking someone, by a pedestrian or something, running into, anything, anywhere, or being run into by another vehicle from anywhere. So one of my friends usually says, when you are driving, you think for yourself, you think for the next passenger, the next driver, and you also think for the stupid driver who can come out of anywhere at any point in time. How do you understand? So what you are doing is, okay, I understand that there is risk involved in driving. What can I do to minimize the risk in driving? Okay, when I sit in the car, I'll pull my seat belt. That is one. What is the next thing? I'll make sure I keep my eyes on the road so that I don't have an impact, at least I'm clear of having impact from my front. I am constantly also paying attention to the rear view so that I don't also, have any impact coming from behind, even though you can't control that 100%. That is all risk management that you are putting in place for driving so that you minimize the risk of having an accident, being run into, all the necessary things. When it comes to trading also involves risk. Now the interesting thing is, unlike driving that I've listed so many things that can happen, someone running into you, you running into someone, you hitting someone, killing someone, all that, right? In trading, the risk is one. Don't blow your account. I can't tell you not to lose. Because losing is part of the game.
You always have to find a way to stay in the game.
Exactly. If you lose small. If you win big. I hope you understand that dynamic. So at the end of the day, I went through most of the mentors who have actually, been through these financial markets over the past. George Soros, Stanley Druckenmiller, Andrew Krieger, Jesse Livermore, all of these people, reading the biography of these individuals, realizing that no, most of these people did really well at points. At those points that we realized that they were having, complications, were points that some of them actually risk it all, or risk more than necessary. I'll understand. If the risk in Forex is losing your money, how do I not lose money on the Forex market? And I think that this is the most important question anybody should ask themselves before they get into this journey. It's not about making money. Anybody can come into the market today and start making money.
For real.
Without knowledge. For real. Trust me. There are people who even preach out there that you don't need Forex knowledge to make money. And it is true. You don't need Forex knowledge to make money. You can come in there, start placing. Someone is on YouTube that flips a coin to trade. They pick the market, they flip, and whatever comes, they say, okay, it's a buy. So they click on the buy, they set their stop loss, and allow the trade to run. And that person is profitable. You get what I mean? So at the end of the day, there's losses in Forex. How do I minimize the loss? How do I, prevent the risk of not losing my account? That is when risk management comes in. So every rule that you set for yourself, that helps you in order not to lose the money that you came into the market with. That is you applying risk management rules to that particular fund that you got in. So for me personally, it's about making sure that I derive the knowledge on the market. The understanding of what is actually going on. Because you can come into the market and say, I don't need the knowledge. All I need is for someone to teach me their strategy. I don't even need to know what candlestick is, chart pattern is, demand and supply or resistance and support areas are. All I need is someone should teach me their strategy of approaching the market. You get me?
Yeah, I get it.
But at the end of the day, would that bring the longevity? You get it? Would that bring longevity in the game? Your stay in the market, is it going to be long? Your losses are going to overwhelm you, as time goes on, because you would be making profits consistently. At one point in time, something will happen that you do not understand. That will wipe every profit that you have made on the market so far.
Yes, for real.
And it is the reality of the game. I'll be getting. Now, me coming in here with maybe $1,000, how do I not lose $1,000? I need to understand the concept of leverage in relation to my balance, in relation to my equity, in relation to my lot sizing, understand all of these things so that I know that if I'm having a $1,000 account and I go and place 10 lot size, I'll pay for it here.
Yeah, for real.
If I'm having a $1,000 account and I find myself placing 5 lots, 2 lots, haphazardly on the market, I will pay for it here. What do I then need to do? If I want to place, nobody's saying don't place that 5 lots on the $1,000 account or 2 lots on the $1,000 account. If I want to place that 2 lots on the $1,000 account, I need to be able to make sure that I understand the market to the point where if market is turning here, all I need is about 15 pips or 10 pips or 20 pips of a stop loss to protect myself in order not to lose the entire capital of the market or to lose more than necessary on the capital that I brought in. We advise people that use 1 to 3% of your capital. Risk 1 to 3% of your capital.
That's the conventional wisdom.
Exactly. But you see, it is 1 to 3 because if I tell people 1 to 3 or I tell people 1 to 5 when necessary, because there are some people who come into the market with $100. That person who is coming into the market with $100, you can't tell them that they should use 1 to 3% of their capital.
For real.
The lowest lot size, that person needs to use on the $100, if we are actually thinking about good risk to reward management, is 0.01. You are giving the person a stop loss of 50 pips. It means if the person sets that stop loss of 50 pips, automatically they are risking 5% of their capital. So you can't tell that person that 1 to 3% of your capital is what you should risk when you are giving the person 50 pips profit, 50 pips SL on the market. How do you get it? So every person, every person demands a particular way. There are different kind of sick people. There is a way a doctor will take care of each of them because they are all not the same. The sicknesses that they bring in are not the same. Some people will come in with different kinds of sicknesses, and the way we will administer is different. So if someone is having $1,000 account in the market, Kemma will tell the person, just like how he does, one, risk 1 to 3% of that capital, which means that understand the lot sizing that you are going to use, understand the leverage that you are going to use for that particular capital, understand the the stop loss that you are going to be setting. As I said earlier on, put the stop loss where it needs to be, know where you want it to be, and make sure that where you are putting the stop loss, if it is too much money for you to lose on that account, minimize the lot size. We don't like to minimize the lot sizes when the stop losses don't tally, with them.
I see. But that's an interesting, analogy, So let's come to the outside one. So you coming from being a teacher who takes 300 cedis per month as salary to now becoming one of the top traders that we have in the country. Personally, do you think trading changed your life?
Yeah, very much.
Okay.
Very, very much.
Like how? How would you say trading changed your life? Yeah. Because from someone coming from a 300 cedis salary job to now you mentoring hundreds of students, managing thousands and tens of thousands of accounts and all of that. Maybe you probably can have a testimony about how trading actually shaped you into the person that you've become today.
So it is not about the person who I have become today, and what I have through trading per se. It is about who I needed to become in order to get here.
Yeah.
So at the end of the day, there is a meal that I had to go through in order to get here.
Yeah.
And there's a lot that meal has shaped of myself. So in talking about impact, I'm not even going to be talking about financial impact.
Okay.
Even though it has had a lot of financial impact on me. But my persona, how I live my life. Now, when I tell people I'm an introvert or I've turned into an introvert, a lot of people, no, you come out there. Yeah, because people knew me those days and how I was, and now people hardly see me nowadays. So it's like you can't really tell who he is. But most of that comes from trading. What I had to learn in order to get here has shaped my life. How to handle my finances, how to handle family, how to handle there's a lot.
Yeah.
But there's also a side that is a disadvantage because you have learned too much, and so whenever you come close to anybody, and it's like you are always reading them with book knowledge.
Book knowledge, yeah.
When I read 48 Laws of Power, I read the book inside out. I think I've done that about 4 times in a row, right? And I read it 4 times in a row because I wanted to understand how each law works, and then also to be able to capture it in mind. After I was done, whenever someone comes close to me and natural, like the person is just being natural, you realize that I find it like it's like I'm trying to peg the person to one of the laws. What he's doing is in one of the laws. You get what I mean? And sometimes you drive people away. You get what I mean? Sometimes you tend to drive people away. What I'll say is this. A lot of people see me today, and they are the ones who tell me that, bro, you are doing massively well. That is what gives me that kind of assurance that I'm not where I used to be. Okay? I see the people that I was with, and I see the gap that I've given them. I think if I were to say the least, about 90% of the people that I parted ways with, if I see them now, it's like the increment in life, right? It's more like you could give them like maybe 10% or 5%, like advancement, which is not bad. But trading the forex market just jump started the whole process for me. They just threw me off And I could see I've propelled myself up front further than I would have been, like if I was still in that same area. Now I hand out, like gifts to people, something that I wouldn't have been able to do back then because of the position that I found myself in. They say that everybody has love, but sometimes poverty can suppress that love.
Yes, very true.
Because you might not be able to show it.
Yeah,
so
because you can't give what you don't have.
Exactly. Someone might interpret that you don't love me, but maybe you love the person beyond anything. You can take a bullet for that person, and or another person can give that individual his money, and not really take a bullet for the person. You see. So at the end of the day, I've been put at a particular area, even though I'm not there yet. Right? But I've been put at a particular area where I feel like I have a bigger opportunity than the people that I used to be with.
Right.
And that gives me a sense of comfortability, a sense of fulfillment.
Well, I think I totally agree with you. Jim Rohn always say that if someone hands you $1 million, even though you became a millionaire quickly, but if you go out there to make that $1 million yourself, when you touch that $1 million, it's not that $1 million that is important. It's the person that you became in your pursuit of that $1 million. That is it. Because when we take you that made your $1 million by yourself, and a person who got handed his $1 million over there, the probability of you sustaining that money, maintaining and multiplying that money to a bigger extent is much higher than the person that got handed over it, because this person hasn't been able to develop any character traits to handle that money, right? But you got that ability to be able to, because if you have been able to get that money, you definitely should have the ability to also maintain that money. So I resonate with you on that side. We all came from background and positions that we had to leave a lot of people behind to pursue our dreams. And now when we look back to where we came from and the people that we left behind, we can humbly say that we are far ahead of them. And it makes you appreciate yourself that you took that bold decision to move away from whatever was hampering your growth back then. So I totally, so as we are about to wrap up, we have a trading industry in Ghana. Here we have a lot of traders. You have a whole brotherhood of traders that you relate to and all of that. There is one thing that has really been worrying me and it's one of the motivations why I wanted to start this, or I started this podcast, that you see the Nigerians out there, you see the South Africans out there, you see all these guys outside Ghana and the collaborative spirit that they have among them to pursue the industry, to push the industry forward and to do this. Why don't we have that same energy in our country? If you have any idea about why is this thing happening? Why is there so much competition, rivalry, and banter in our own forex industry in Ghana here, instead of the fact that we need to actually be collaborating and pushing the industry forward and actually making money for ourselves?
I don't know, but I think it all boils down to, I wouldn't have a clear perspective on this, but what I can say is I know few people who actually bond with each other. Whenever I'm in a space where I'm not able to reach out to other people who are within that particular space, I try as much as possible to cut off whatever is hindering me from reaching out to those individuals. So one of my major goals has been, at least, coming together with all of these traders. At the end of the day, we are all sitting in our rooms trading and making money off the market.
Yeah.
What is really about we meeting each other?
Yeah.
You get it? You could look at it that way. I mean, okay, so once a while we could say, oh, let's all meet and then let's all, but we also, everybody understands that everybody has a responsibility to meet, especially now that the economy is at a particular level where
everybody make hot.
Everybody make hot. You go call somebody, chop some loss.
Yeah.
And then the person will be like, but I try as much as possible to reach out to every one of the traders. And as I said earlier, anything that hinders me from doing so, I cut it off. because I understand that togetherness is what pushes people forward. And you might know something that I might not know. So at the end of the day, if I get closer to you, they say there is no secret, there's only privileged information. If you do not know, it means that you are not in the circle that is privileged to have the information. So I try as much as possible to be closer to these traders, so that if there's anything out there that I may not know, I'll get to know. Through that, I've been able to learn a lot of things. So I would say personally that I'm not a product of myself. Majorly, I'm a product of myself, probably 80%. But the 20% is being a product of all of you guys. The little knowledge that you have to give me, the little knowledge that Aram has to give me, Common has to give me, Yao has to give me, and I have everybody, Kira and all, right? I call these people, not like maybe in like week by week. I have communications with several of these people week by week. We talk, sometimes on phone for 30 minutes, just talking about maybe a market movement. It's nice, it's beautiful. If you look at the Nigerian industry, I think it's even in the music industry. You see that the togetherness. The togetherness is there. So I think it's a Ghanaian thing, whereby everybody feels like, Charlie, there's too much on our heads. So not any negative thing. The only thing that I'll say is, if we practice how the Nigerians do it, it will push us forward. So we should actually implement something like that down here in all our industries. It would be beautiful. But you can't force anybody to do anything.
Right. I think I totally understand. So before we wrap up, let me just throw the last question for us to wrap up. There might be someone out there, wanting to know. Just walk me through a day in a life of KEMMATRADES, right? your daily routine before you wake up every morning, before you hit, you come sitting in your office, or before you come sit in front of the screen. What's routine? Because there might be people out there that will then like, okay, so how does this guy approach the market? How does this guy, start his daily routine before he start working? So walk me through a day in the life of KEMMATRADES and how you actually start your day as a trader.
It's really funny because I have something I was about to share. There are videos that I share on my Instagram page, KEMMATRADES, from time to time. And there's this video that's sitting on my desk right now that I have to share. In the video, I'm giving people a routine for them to follow, a plan for them to follow, a normal life plan, a trading plan, like eating plan, and then a family plan. And I was actually willing to put it out there through the video. The funny thing is, all those things that I wrote down, I'm watching quietly and I realized that it's not all the things that I even practice in the first place. I wrote in there that you should exercise in the morning. To hell with exercise. I mean, I wake up and I feel like, what do I have to shed off? I'm going to exercise if I have to, break some fat down and then all. The fat now, I don't have some. I was telling you that I don't usually wear shorts. Because my arms are not like that. You get it? So at the end of the day, okay, so Kemma wakes up in the morning. Obviously, the friends are out there, the brothers and friends that I have out there. If I even see first thing that I do is bath, they will call you right now and tell you I'm lying. But okay, so Kemma wakes up in the morning, brush my teeth, and then now currently, most of the time wifey has to do a lot of things. So I wake up really early. I take care of the baby for a while, not too long, but whilst wifey is doing the other things like washing and stuff, I'll just go and lay by the baby, when he's awake. And if he's awake, like I'll be sometimes he doesn't want to keep quiet.
Daddy's duty.
Exactly. So most of the daddy duties I'm now coming into that kind of space. So it's still rusty, a little rusty. And once wifey comes and I get the opportunity, I have a place that I call man cave. I have my desk, my office space, as beautiful as this. Not as beautiful as this, but almost. I've tried as much as possible to do something. Then I enter the place. I check the market. Previously, before I sleep, I always check you know, like the final price, closing price point of gold. So when I wake up and I come into, you know, like the space, whether it is 8 a.m., you know, 7 a.m., I want to see where gold is, where gold has moved towards from that closing price. Is it towards the upside? Is it towards the downside? I anticipate my, I told you earlier on, what's the direction for the day from the previous day? Okay, have we hit any resistance? Have we hit any support? I'm looking at, okay, current structure, significant swing points in the market, find my entry, place it there, set an alert, and then leave the market. Now I'm free to do other things. When I come off, you know, like I'm going around, maybe there are meetings to attend to outside of the house, you know, I'll just quickly rush and then go get them. Usually I find myself eating my first meal of the day around 11 to 12. Yes, and that keeps me going until maybe 4 p.m. before I take another meal. So usually I'm there two meal kind of guy. And basically that is it. During the day, if there's anything my wife wants me to do, I'll basically do it, help out with a few things. There's not so much to do for you know, someone who is working from home. And
not like before that you need to wake up and go to school to go and teach.
Exactly. Now I just and because of the way I trade the markets, there's a lot of time on my hands. You set alerts when you hear the alert, the price has just entered your point of interest. You need to go rush, see what exactly is happening.
Right.
What else? Basically that is it. So the major things like the exercise that I would have put in there and all, they don't come. Maybe walking and taking some fresh air, you know, on the compound. Yes, I do that. You know, from time to time.
Right. I understand. Well, I think we are about to wrap up the conversation. It's been another intriguing conversation as well.
Oh,
and you know.
Sorry, and let me not forget the Bible. I always have it on my desk. I need to read a chapter of Proverbs.
Okay. So before we leave the show, before we rise up now, what's your advice for new traders out there?
Okay. New traders.
Yeah. What's your advice for new traders or every trader out there listening to us right now? What advice will you give to people out there or our viewers watching us?
Okay, my advice is this: one, be real to yourself. We are in Ghana. Personally, there are some profits that I make on the market. When you melt it down into cities, it seems unrealistic. 30K, you know, on a particular trade. That's like, you know, like melting it down. It's unrealistic. Be realistic to yourself. So, what capital do you have? What is the long-term goal? What is the short-term plan that you would implement for you to hit the long-term goal? Make sure that you are following that plan, because there is drawing the plan and there is actually executing the plan. You need to be intentional about it. Read, you know, books. Make sure that you read books on trading. Make psychology your priority, even though you have your own strategy. Try as much as possible to read psychological, you know, books as well. Books that will open your mind to how you approach the market and how you manage your own emotions on the market. And then as a beginner, don't take anybody's money to trade for them. Work with what you have. As for this one, I'm going to be bent on it. As a beginner trader or as an advanced beginner trader, or don't even think of that first. There will come a time when you have built upon the skill, and even that, now I don't take anybody's money to trade. You create your own account, you give me the logins, so you have total control of your own account. And I'm only trading. When I'm done, you are the one who will give me my split of the profit. It gives me, you know, like a very simple.
I understand.
So no rush at all. Many traders like the rush. You know, rushing has actually ended the trading career of a lot of people before they actually started. Make sure you learn the basics of the market, and the things that are of the past that we think are outdated. They are the same things that are still making people money in this market. Prioritize those things. Understanding the candlesticks, understanding chart patterns, understanding resistance and support areas in the market, understanding market structure, how to, you know, thoroughly maneuver your way through market structure and everything, and then also perfecting your entries and exits. That will build your edge, you know, on the market. Have a mechanical process. Whenever you sit behind a PC, there is a way that you approach the market. Don't, you know, like go it's like a machine.
Yeah.
Build yourself like a machine. This is what a machine has to do. Over and over, you do the same thing, repeat it over and over. And don't stress yourself with all the things that the pro traders are showing out there. They can confuse your whole life.
I see.
On your journey, give yourself maybe, give or take like 8 months to build your capital gradually, taking profits along the way. And then once in a while, take yourself out, relax, buy yourself something, really nice. Every 3 months, every 6 months. Commend yourself for what you are putting yourself in. Because 5 years from now, you will thank yourself for doing this.
Yeah, I think that's a good advice. So that's the advice for all of you out there. We are about to wrap up with the conversation. It has been an intriguing conversation, and actually this is one of my favorite conversations that I've had. It's been really exciting and very informative, and I can't wait to actually share this conversation with you guys out there. We're actually going to be bringing more of this conversation, more of this value close to you guys. Those of you out there who actually intend to actually succeed in this industry, succeed in this business, I think this is the right channel for you to actually stay glued to. Stop going on YouTube, going and watching us and stuff of influencers and all of that. These influencers have gone on their holidays to go and do whatever they are doing. When they come on YouTube, then they will be sharing their YouTube, and you are going to watch it. Meanwhile, you have a dream to become a profitable trader. So what are you doing on these pages? Stay glued to the most important thing, because it's all about priorities. Because nothing happens in life by accident. Whatever that is going to happen to your life in the next 5 years depends on what you are doing with your time and energy today. So set your priorities right, keep learning, keep focusing on the charts, keep focusing on the book, keep actually taking inspiration from people who have done what you want to do. If there is any mentor that you are associated with, make sure that you deduce maximum value from him or her, or make sure you get what is your money's worth. Don't just go out there on social media chasing all these illusions out there. That people driving Lambos and people posting bands and all of that, it's none of your business. Your business is to focus on yourself. Your business is actually to be able to lock yourself up and build the skill. That is what we are here to actually make you understand. That is what we are here to ingrain in your mind for you to understand. That there is no coincidence when it comes to success out there. Everything that you're going to achieve is actually going to be as a result of the efforts and energy that you put in for us to happen. So if you want it bad enough, you should always go for it yourself. Until we bring you the next episode with the next guest, I wish you all the best in your trading. I wish you all the best on the chart. I wish you all the blues. Please don't trade with money that you can't afford to lose. And like Kemma said, never take anybody's money to trade for him or her. When you can't even manage your money, you can't manage anybody's money. Thank you out there. Until we meet again. Bye-bye.